Welcome to episode 4 of Bitcoin Mining News. Make sure you like and subscribe so you can stay up to date on all things related to Bitcoin mining and energy. There is never a slow week in terms of news when it comes to the Bitcoin world, and this past week was one of the more busy weeks. Let's get into a number of stories here, but first, the numbers. Over here on TimeChainCalendar.com, we can see the current exchange rate. For 30,373 USD, you will get yourself one shiny Bitcoin. And if you would rather exchange dollars for sats, you will get 3,292 sats for $1. Next up, looking in the top center of the chart, we've got an average block time of 10 minutes and 24 seconds currently, and the average hash rate for the last 14 days is looking like 385.8 exahash, right there under 400. And finally, looking at the on-chain transaction fees, for a high priority, you're looking at 18 sats per VByte, and for a low priority, you're looking at 10 sats per VByte. Now, before we move on to the rest of the news, I need to do a little bit of house cleaning. In the most recent episode that came out on Monday, I read something that was inaccurate and I failed to catch it. I'm going to play that segment and see if you catch it, and if not, I'm going to tell you exactly where I messed up. Crypto enthusiasts are hopeful that a once-in-4 years event which rewrites the underlying code of the world's biggest cryptocurrency will extend the current market rally. The article says, crypto enthusiasts are hopeful that a once-in-4 years event, that part's accurate, that's correct, which rewrites the underlying code, and that's what I failed to catch. That is not correct. The halving event does not rewrite the code of the blockchain. That is already baked into the protocol. That is hard-coded into what Bitcoin does. It's not rewriting it. Now, on the one hand, we could say, well, maybe the author just made a mistake. But when you're in the business of journalism, you don't get to make mistakes. Your job is to report the news as accurately and as truthfully as possible. And that means doing research before you put out pieces. And this is true of myself as well. Before sharing that article and reading something that was incorrect and sharing it with you, I should have done a little bit more research. I should have put the pause on and said, hey, wait a second, something doesn't jive here. I don't think that's right. But I failed to do that. And it wasn't until I saw this from Pierre Rochard that I realized my error. He says, 1. Halvings do not rewrite Bitcoin's code. They have been in Bitcoin's code from the beginning. And point 2, mining rigs hash block headers. They do not validate transactions. He goes on to say, we need more Bitcoin education, especially for mainstream journalists. These paragraphs are from Bloomberg. I will always do my absolute best to deliver only the most accurate and truthful news possible. And when I mess up, because I'm human and I'm prone to making errors, I will inform you of where I messed up. Now, moving on with the news, as far as I can tell, this is accurate because I've seen it reported from multiple sources and people that I respect and trust in the space. Here we see that Vanguard now owns $560 million worth of Bitcoin mining stocks. Asset manager Vanguard Group has upped its exposure to Bitcoin mining companies. Monday filings with the U.S. Securities and Exchange Commission show, increasing its stake in the industry to over $500 million. The financial industry heavyweight, which manages $7.2 trillion in assets, bought more stock from Riot Platforms, which Pierre Rochard is a part of, and Marathon Digital. Marathon Digital, which trades on the NASDAQ under ticker MARA, is currently trading for $16.03 per share, meaning Vanguard's investment stands at $280.5 million in shares. The investment company also increased its stake in Colorado-based Bitcoin miner Riot Blockchain by nearly 18%, from 15.2 million shares to 17.9 million. Now, before I read this next section, I want you to think of this phrase: slowly and then suddenly. Just 2 years ago, Vanguard Group said on its website that the long-term investment case of cryptocurrencies is, quote, weak. Now, it is Marathon Digital's largest shareholder. Can you imagine making such an about face in just 2 years? It'd be like a girl saying, I don't think we're ever going to be more than friends at best, and then just 2 years later calling you up and begging you to be a part of your life and doing whatever it took to make that happen. Moving on with the news, we're going to jump over to Cointelegraph to talk about miners and difficulties and something that hasn't happened in about 6 years. Bitcoin mining difficulty hits all-time high as Bitcoin miner selling peaks. In recent weeks, Bitcoin miners sent a record amount of Bitcoin to exchanges right as the network's difficulty metric hit a new all-time high. Are miners close to capitulation? And here's a quick vocabulary lesson for you because I didn't know what capitulation meant for the longest time. It means the action of surrendering or ceasing to resist an opponent or demand. Continuing, the hash ribbon indicator created by independent analyst Charles Edwards tracks the 30 and 60-day moving averages, MAs, of the network's hash rate. When the 30-day MA falls below the 60-day MA, it is a signal that miner capitulation may be occurring, meaning unprofitable miners are moving out. The two lines are marginally close to a crossover, and the increase in difficulty may finally provide the catalyst for the capitulation of weaker miners. And this is what I was talking about at the outset, what we haven't seen in around 6 years. In June and July as well, the 30-day cumulative transfer volume of Bitcoin from miner wallets to exchanges spiked to a 6-year peak. Look at this chart, ladies and gentlemen. That is a massive spike. That is Bitcoin moving from miners to exchanges. Now, when I see that chart, the one with all the Bitcoin moving from miners to exchanges, I've got two questions that come to mind. Question one is, where is that demand coming from, and why don't we see it reflected in the price of Bitcoin? Or are we, and what's going on there? And then two, how much Bitcoin is being sold directly from miners to whales, or sharks as they're called here in this article? How much Bitcoin never even touches an exchange? Because you can buy directly from a miner. Now, I don't know any miners personally, but that is totally something that you could do if you knew somebody that mined and was going to sell it to you. And for our final article, we're going to jump over to Forbes to talk about Bitcoin and custodianship and banks around the world. Bitcoin banking. European banks are beating US banks in the crypto custody race. European banks are currently leading the global race in providing Bitcoin custody services, in sharp contrast to the regulatory challenges faced by US banks. As the world of cryptocurrency continues to evolve, these institutions are making significant strides in embracing digital assets, despite the U.S. Securities and Exchange Commission's guidelines that treat customers' crypto assets as liabilities. Deutsche Bank, a major player in European banking, announced its plans to offer these services in early 2021 and has recently applied for a digital asset license in Germany. Meanwhile, Crédit Agricole's Cassis has already secured crypto custody registration in France, further solidifying Europe's leading position in the Bitcoin custody race. French banking giant BNP Paribas is also entering the cryptocurrency custody space through a strategic partnership with crypto custody firm Fireblocks. Additionally, DZ Bank AG, one of Germany's largest banking groups, has announced a strategic cooperation with Medico, a provider of security-critical infrastructure for digital assets. While European banks are making significant strides in offering Bitcoin custody services, U.S. banks are grappling with regulatory challenges. The SEC's proposal requiring investment advisors to keep customers' crypto assets with qualified custodians has faced criticism from various quarters, including financial giants J.P. Morgan and the Small Business Administration. Navigating the crypto custody race. As the crypto custody race intensifies, the landscape is becoming increasingly defined by the proactive strides of European banks and the regulatory hurdles faced by U.S. banks. The increasing involvement of U.S. households in crypto assets, coupled with a growing interest among younger generations, is fueling the demand for these services. This underscores the urgency for U.S. banks to navigate their regulatory challenges and meet the evolving needs of their customers. Bitcoin needs a grandma with the iPad moment, that time where grandma, who had no interest in the internet and doing anything, sees how easy the iPad is to view pictures of her grandchildren. Bitcoin needs something like that, because right now it is a pretty big ask to go from knowing nothing about Bitcoin to taking self-custody of it. That isn't a real simple thing. Signing up for an email, that most people can do, and most people have done, but getting Bitcoin into self-custodianship is no small feat. And so I completely understand why that is a hurdle a bit too high for some people. So I am very much looking forward to developments in that world. So seeing banks getting in on this kind of thing and helping people with this, well, I know they're for profit, but if they're for profit, that's how the free market works, and it helps people take custodianship of their Bitcoin. Hey, I'm all for it. In closing, like, subscribe, and if you're interested in learning far, far more about Bitcoin mining and energy, scan this QR code right down over here and get yourself some tickets to Mining Disrupt 2023, taking place in Miami, July 25th through the 27th. Until next time.